Welcome to the Assurance Mortgages Q&A. This video question, how do I know which mortgage loan is best for me? Well, there's actually several different mortgage loans to choose from, and it can be overwhelming. What I'll do today is just cover the basics of the most popular ones, and I'll focus on the loans that require the least amount of down payment first, and then on up to the ones that require basically the most. There are two loan types that actually offer 0% down, and that is a VA loan and a USDA loan. If you are a vet, I highly recommend that you take advantage of the VA loan. Great program, low interest rates. If you're not a vet, however, the other 0% down option that you do have is a USDA loan. There are some certain requirements that must be met in order to use this loan type. The main one is the income limit. If your income is over the USDA guidelines, you won't be able to qualify. It is also based on location. Believe it or not, there's certain areas in the state of Nebraska where USDA loans cannot be used. There's a website where you can input your address to see if you are in a USDA area. If you're not, you won't be able to use this type of loan. Also, the USDA is also very strict on the debt-to-income ratio because they know that if they're going 100% loan, they want to make sure you have plenty of income to cover all of your debt. So if your debt-to-income is rather high, this probably won't be the loan that'll work for you. Lastly, USDA, because it is a government loan, the home will have to meet certain requirements. Mainly health issues, safety issues, things like that the home would have to pass. The next one is a first-time home buyer loan. Now, this is actually a conventional loan, but you do only have to have 3% down. This loan is actually great if you are located in one of those areas that the USDA does not service. This loan can be used statewide. You will have to stay under that income limit, though, just like you do with the USDA loan. It, too, is strict on the debt to income, but there's no guidelines that the home would have to meet. In other words, you don't have to make sure that the home has, no peeling paint, nothing like that. It's a lot easier to get an appraisal through with this type of loan. Another favorite that a lot of people use or ask me about is the FHA, 3.5% down loan. Now, the FHA is great because it has no income limit. You can make as much as you want and still qualify for FHA. And you can also be located anywhere in the state. They also allow the debt to income to be a little bit higher. So an FHA loan is a great option if you don't live in the USDA and you do have a little bit of money down. The only drawback from the FHA loan is, of course, it is a government-backed loan also, and so the home must meet certain specifications and inspections from the appraisal in order to qualify. Lastly is just a regular conventional loan. Now, most lenders require that you put down a minimum of 5%. However, I have a lender that will only require 3% down, and you do not have to be a first-time home buyer. And this is a great way because you can use this one if you don't qualify for any of the other loans. There is no income limit. You can be located anywhere. This loan will allow you to have a higher debt-to-income ratio, and there's no inspections. Nothing is required on the loan. If you'd like to visit more about which mortgage loan would be best for you, please contact me. My information is down at the bottom of the webpage. Thanks again for listening, and I hope this helped explain the different types of mortgage loan options so that you kind of feel more comfortable in which loan might be best for you.